Okay. Cool. All right, guys. So here we go. Today's webinar, we're going to talk about magic candles. Ain't that something? Candlesticks and magic stuff. So let's dig in. Real quick, that old disclaimer that we all know about. I'm not an investment advisory service, not a registered investment advisor or broker dealer, none of that stuff. None of the content I publish or the live sessions I do are or constitute recommendations. Take care of your own money. This is for educational purposes only. You guys know all this stuff. There are people out there who are qualified by the SEC to tell you what to do with your money. I recommend you be careful with them too. They have their own agendas. So there you go. Got that disclaimer. Everyone in here has already seen all this, so we don't need to go through it. But the only relevant part is I've been involved with the crypto and financial markets since 2017. Everything else here is just another life story with its ups and downs and an old picture. All right. So as usual, we'll get into this 80-20 stuff first because that kind of really dictates everything. So once again, this is a reminder for most of you, but also a good refresher for most of you, including myself. So let's get into this. You all know the 80-20 principle. There's basically 80% of the effects come from 20% of the causes in this world. Just looking at the green section here, 20% of your efforts generally bring 80% of your results, and the opposite is true. 80% of your efforts bring only 20% of your results. So it's pretty simple, right? Where do you want to focus your energy on? Right here, these few truly powerful, impactful things that you can do that bring the majority of your results, and reserve the rest of your energy. Don't waste it on all this other garbage just to get, marginal results, maybe, which will drain your energy, your time, and really you have nothing left in you. You're just beat up and wondering why you're not getting results. So again, I do everything based on the 80-20 principle, absolutely everything, even life stuff outside of trading. I make decisions based on the 80-20 principle, to the point where if a decision takes me more than 5 seconds to make, it's a decision I'm not interested in making. I just leave it. The answer is no. Just move on. So that's even 80-20 on its own. Actually works pretty well. So very simple. There's a few very important, impactful things in this world that bring the majority of the results. It's important to identify those and just put your energy there. The rest of it is just a waste of time. And don't forget, you're going to die one day. Might as well do the important stuff. You're not here forever, right? Simple as that. That's the book on 80-20. Again, all of you know this book. Most of you, again, a good reminder. Go and read it. Buy it, read it, all that good stuff. Very, very powerful book. Examples of 80-20 for those of you who are still non-believers, even though you are here in this mentorship group. I'm just going to drill it into your brains with a fucking power tool if I have to. So examples of 80-20, just if you don't believe it, just look in the world around you and you'll find it to be absolutely true. Here are some examples on the screen. We'll go through some of them. 80% of a town's traffic tends to be on 20% of its roads. 20% of your wardrobe is worn 80% of the time. 20% of the Earth's inhabitants cause 80% of the world's problems, right? We know all these things to be true. Again, just observe the world around you. Just look at anything and everything. It's quite amazing. You'll find, 20% of your knowledge is used 80% of the time. Now we're going to get into some day trading stuff here. I'll show you how this works, really. So if you don't believe the 80-20 principle, I strongly recommend just look in your own home to begin with, and then look in the world around you and your city you live in and all this, and you'll find the 80-20 principle at play all the time, right? Seriously powerful stuff. Again, when something is not 80-20, I'm not doing it. I just identify it quickly as in this just even looks like it's a lot of work and the result might be there, might not be there. It's marginal. Forget it. It's already tossed out the window in less than 5 seconds. So I'm telling you, even when it comes to trading decisions, I do it that way. It better be right, better be powerful. Otherwise, no point. So here we go. How do we apply that 80-20 stuff into candlesticks? So today's whole thing is how powerful candles are, really magic candles, right? So again, I believe candlesticks are pretty much the biggest 80-20 thing in trading. That's why I use them. And I don't really use anything else. You have some levels, so it's just candles and levels, really. So today we're going to get into truly the power of these candles and how I get the majority of the decisions I need to make. I get them straight by just looking at the candles. Very simple. So all of these are recent screenshots. This particular one is yesterday, 30th of July. Just look at this. What I do is firstly, I look at a 30-minute chart. I have these Fibonacci levels on, right? Now, very simply, the levels are too tight for me to take trades on, so I'm not trading. That's easy enough. But this is not a webinar on levels. We're talking about candles here. If you look at the pre-market right here, this gray zone, right, you can see that it's just been consolidating. It's in a tight zone. It went up generally, but then right before the market opened, you can see it's just indecisive. It's up and down and up and down. You can identify the range. That itself right there is telling me don't trade it inside the range. Pretty obvious. It's just chopping around. Also, it's telling me don't trade a breakout from that range, because just look at the quality of this consolidation. These last three candles before the open, you can see they're not going anywhere. They're not generally making an ascending or descending wedge, are they? Just to the naked eye, it's just choppy. And so there's a not just a consolidation, but the quality of the consolidation. It's a very poor quality consolidation. So I'm not going to trust a breakout. You're likely to get plenty of false breakouts. So sure enough, early in the day, false breakout to the upside. Later in the day, false breakout to the downside. And then by that point, you're already, what, noon or something. You're over here. By that point, you've been watching the market 3 hours. You're exhausted. What the hell are you going to trade for? Usually that's kind of how I do it. So false breakout on the top side, false breakout on the downside. And realistically, after that, which direction are you going to trust? After knowing that the consolidation was no good. So what I'm trying to say here is, even if the levels were wide enough to take a trade and have a good 10R opportunity, I still wouldn't take the trade, because I don't trust the price action. Firstly, very simply, I don't trust the quality of the consolidation. That's it. That whole thing takes about 5 seconds to look at. Even without levels, you just pop open the 30-minute chart before the open, and you can see it. And you're like, nope, no trade today. Leave it alone. Simple as that, right? That's what kept me out of it yesterday. Here's another one a couple days ago. Actually, all of these are recent screenshots. I believe all of this is this month. Look at this interesting activity. Again, the levels are there, but I didn't trade because of the levels were too tight. But this is not about levels. You have this 30-minute action, right? Before the open, you can see where it's making this arch over here, but we're pretty well zoomed out. And you have the SPY, just looking at candles. Again, the magic of candles, very obvious. Made a move to the top side, right? Even gapped up overnight, made a nice looking top over there, straight down. Made a second top before the market opens. You can identify that as a top. You have one top here, you have another top there, a little lower than the first one. What do you guys call this? After a move up. Any ideas? Anyone? No? Yes? No? All this. DB, Ara. You're funny. Yes, double top. Thank you. Good. Y'all are awake. Good. Sorry, I'm not as entertaining as most other guys. I just kind of talk monotonously. But yeah, double top. Not bad, huh? You can take this, right? Big deal. Just looking at candlesticks, ignoring levels. Very simple. The thing went up. One top, second top, lower, nice big gap in the middle, double top. But you know what? That is complete bullshit. Don't trade this. Twin Peaks. Don't trade this. Even though it did make a really firm drop, if you shorted it early in the day, you probably have a good day. Why don't take this? Because if you look at the move, it started down here, right, around 635. And it ended up here around 640 or so. Was it 639, whatever? Now, the bottom of the double top, you see that has this arch in it, right? Look at that. It's retraced basically the whole move, right where it started from. I mean, I'm just eyeballing it. Right, a double top, if this is the beginning of the move down here, 635, and it gets up here, you want the double top to happen in this zone around 638, 639. You know, you don't want to retrace the whole move and then come up again, and then you're telling me it's a double top. Are you kidding me? Seriously? No. Again, it takes 5 seconds of opening up a 30-minute candlestick chart before the open and realizing that the price action is no good. Don't touch it. In this case, it's just telling me simply it's not a double top. It's a move up, it's a move down, and then another move up. And that's all you've got before the market opens. That's it. So even if the levels had enough space between them for me to take a trade, I still wouldn't take a short based on a double top. No way. So again, just understanding what you're looking for in candlestick patterns will give you all the magic you need, right? Magic candles. You get to know what you need to know about deciding is it a setup or is it not. It's simple. You don't need a whole lot of bookmap or whatever it is. I mean, I don't use any of that stuff. It's very, 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 very simple. So that's it. So no double top. Anything else that we can see here on this setup in this 30-minute chart? Again, personally, I don't say anything. I see it went up and it came down. That's a bit of a consolidation. There's no way to trust it to do anything. So I just don't touch it. Just, again, without the levels, just looking at the candles, there's nothing going on. Sure enough, it dropped, and things happen all the time in the market. The market moves up and down all the time. Various things move up and down all the time without you. Doesn't mean that just because on this day this thing dropped and you don't have a setup for it doesn't mean you suddenly go create a new setup in the next 5 minutes and then the next day you can trade it. No way. That's not how you do things. That's how you destroy your account. So very simple. Again, the magic of candlesticks, right? I have a very firm criteria of what a double top should look like, and it's not here. This was almost there. Look at you. All of you guys here in the chat got fooled saying this is a double top. This is not. This is a move up, a move down, a move up again, and a move down again. That's all it is. The only thing to identify maybe was on this day, if you can identify the breakout from this consolidation, maybe on that, but that's another whole different thing, right? So there you go. What do we got here in the chat? Fab, if you're saying if the levels are too tight or too wide, you don't trade like they did in roadblocks this morning. Fab, yeah, I don't trade if the levels are tight. Okay, that's it. I'm used to the levels on the SPY. I only trade the SPY. I'm used to being about $3 is like a minimum. I don't have a firm criteria about that, but it's basically around about $3. That's very minimum. And anyways, today is not about levels. We all know about these levels. It's about candlestick patterns and really the magic of them, because you really get the majority of the information you need to know just by looking at a candlestick pattern. And I'm looking at 30-minute charts, not at a 1 minute. All my decision making happens on a 30-minute. If I find a pattern I like, then I'll zoom into the 1 minute and see if I'm getting a pattern there as well, which is now a fractal pattern. And then you have something. But again, the majority of my decision making happens here. 99% of the time when I'm deciding to enter or not to enter, or profit or not to take profit, it's happening on this chart. And all of it takes less than 5 seconds to make a decision. It's really that simple. There you go. On this day, yeah, just going back in the last week or so, look at that. This thing gapped up, pushed down, consolidated, right? Again, the levels are too tight, so no trading. But ignoring the levels, just looking at the candle patterns. What do you guys think? Before the open, gap up, push down, consolidated, broke through the consolidation on the downside, running into previous day's highs, right about that zone. All in the pre-market. What do you all think could possibly happen before the market opens? Give me an idea.
I'm thinking long.
You're thinking long?
Yeah.
Okay. Long off of what? Previous day's high, perhaps?
Pretty high and management lined up with an Avi and The Avi8ors level, which look like it's kind of doing.
Okay. Okay, that's one idea. Anyone else? No? Yeah, so you guys are all terrified, huh? Or you're asleep. One or the other. All right, it's just Anthony and me here today. The rest of you guys, not going to bother. All right. Well, you know what? Yeah, that's a decent idea. The thing gapped up, and if it happens to want to bounce off of the previous day's high, sure, there's something there. You might get something out there, right? Again, I didn't touch it simply because the levels are too tight, but we're not talking about that today. We're talking about the magic of candles. And it's very simple here. Look at this thing. On this particular day, you had a very bullish day, and then a consolidation towards the end of the day, then a breakout of that consolidation. And then it came back into that breakout area, all in the pre-market. And sure enough, it could bounce up from there, which is nothing more than a retest of the breakout that happened overnight. Not too bad, huh? Yeah. So, I mean, these are ideas you can work with. You have basically a retest of a breakout. But then what you want to think about is that retest, right? And the quality of the retest. How does that happen? Personally, I wouldn't take a long right after this big bearish candle. No way. I'd wait for it to consolidate, which it did right there. This first 30-minute candle. And then you're starting to get even more consolidation. You're starting to get maybe some bullish activity. Maybe. But this is all maybe. Is maybe good enough for you to take a long? Based on what you're seeing on this chart here, I wouldn't touch it. I'm not seeing one of those big long tail hammers or a big bullish activity on just a candlestick chart, 30-minute candlestick chart. There's nothing here for me to take it long. Right? The idea might be right, but then you have to watch the candlestick price action, which is here on the 1 minute chart. You can see it. There's really not much going on. Just a big choppy mess. Right? And personally, like I said, I make decisions on a 30-minute chart because 30-minute candlesticks are truly some sort of special magic. I'm telling you, they give you most of the information you need to know. Not 100%, not everything, but enough for me to decide to not touch it. Right? So again, on this day, I didn't touch it because of the levels, but if I was ignoring the levels, if I was just working with previous day's high, I wouldn't touch it. So once again, getting close to taking a trade, right? But it's not quite there. And if it's not quite there, you're wasting your mental capital and your financial capital. And you're going to blow it up. Then you're going to send me a private message saying, Avi, I blew up. I'm going to tell you, man, you're fucking stupid. Don't do this. That's about it. It's really going to be that way. Okay? It's simple. Most of the information you get from that you need to know, you get from 30-minute candlestick charts, at least for me. So I'm going to show you guys how powerful this is, how 80-20 this is, how simple it is, right? How about another one? Look at this. Again, the level's too tight, so no trade. But if not for the levels, look at this activity on the SPY. It was bullish a few days earlier. Then it got into consolidation on the open or during the opening hours. It didn't really go anywhere. It was just consolidation again, overnight consolidation. So now before the market opens on this day, what do you think? What would you think? It was bullish and then consolidation basically for a day and a half. Any ideas? What could you work with? Just looking at the 30-minute candlestick chart. Anyone? Chop. There you go, Ara. That's it. There you go. Thank you. Thank you. It's nothing but chop. Again, very simple. It's been choppy here, right? Within the previous day's high and low, been choppy, right? Within the previous day's pre-market zone, it's been choppy. It's all choppy. Nothing but chop. Do you want to trade chop? I don't. Fuck that. So don't touch it. Easy enough. Just don't touch it. Again, 95% of the work that your trade book does for you should be telling you don't touch it.
Avi, but
Sorry,
if
go
it
ahead.
was bouncing off, like going higher than 630, what is it, 5? If you saw it breaking that level, would you go long or no?
It has to break that level in a certain way. I need to see a particular kind of consolidation, then a clean, neat breakout on two charts, which is 30-minute and a 1-minute. Then I want to catch the retest on the 1-minute. If all that happens, and again, all that, I just need a candlestick chart to look at. I don't need anything else. But I need all that in sequence, and then I'll put on some real risk and go with it. And that too, if the Avi levels have enough room to run. That's all I've been doing all year long. So yeah, I would take it, but it has to meet all those criteria. So if even one of them is not met, basically don't touch it. And that's it. That's how you conserve your capital. Again, just using simple 30-minute candlesticks. These are magic candles, man. I'm telling you guys. They tell you most of what you need to know for a day trading perspective. Right? Swing trading is something else. Scalping is something else. What I'm talking to you is about real big time trading, as in catching big moves. The kind of moves that take a few hours. You got to enter and you got to hold on to it for a few hours to get those 10R kind of trades. This is how I do it. It's really just all 30-minute charts. Again, once again, this whole thing is telling you don't touch it. The only potential opportunity would be above previous day's high, and then it has to set up a certain way. And in any case, just on Avi levels perspective, no trade. So just ignore that. Another one here. Look at this. Okay, so on this day, here we go. Before the open, you can see a pretty tight consolidation, right? In the pre-market, didn't really go anywhere, which is a good thing, generally speaking. I like a tight consolidation because then the breakouts tend to be explosive. Generally how I like to look at it. Also, previous to that, you see it's been bullish. So what you're getting is a big old ABCD pattern with a potential to go up. What do you guys think? Is that a decent thesis? Tight consolidation after a bullish move and a big old ABCD pattern, potential go up. What y'all? Raman, you like it? No, at least Raman's awake. Raman's awake. Darius is awake. Anthony's awake. Ara's awake. Who else? Fab's awake. Helen. Who else? You guys. MJ. You guys. All right, stop it. I can't keep up. Stop it. Stop. Well, yeah, fair enough. ABCD pattern, 30-minute chart makes sense. Yeah, no big deal. But fucking hell. Again, it's the quality of the consolidation. This is a decent little tight consolidation, a couple of little false breakouts on the downside. What I like to see is an ascending wedge. As in, I want a flat top, absolutely flat, and these lows getting higher, which you're kind of seeing here, but I need a flat top with it all in the pre-market, or at least at the level I'm interested in. And then I'll get ready for that breakout. So this thing told me it's the quality of the consolidation, which you can identify within a couple of seconds of looking at it. It's not there, so don't touch it. And sure enough, if you try to get into this, I mean, you're up, you're down, I don't know what you're going to do with this, man. This is not trading. This is scalping. You can scalp the heck out of this. What I'm talking about is getting those bigger trades. Yeah, Rahman, go ahead.
Hey, I have a quick question about the previous setup, and we're talking about the breakouts. Can you just kind of explain what that consolidation and setup looks like when you're looking for the breakout?
Yeah, we'll get into that. Can you Let me get through these slides, and then can you ask that again towards the end? We'll do Q&A, and I'll bring up those other ones, what it should look like.
Awesome. Yeah, no problem. Cool. Thanks.
Yeah. Now here, guys, the reason so far I'm showing you a lot of things that are telling you don't touch the trade is because 95% of what you should be doing as a trader is don't touch it. Show up and don't touch it. Show up and don't touch it. Show up and don't touch it. One trade a day is plenty. Remember, one trade a day is 1 point of decision making. The market's open for how many hours? What, 6 hours, 6.5 or something? You only make a decision in about 5 seconds, which means 99% of the time, really, you're not touching it. That's what your trade book should be doing for you, telling you don't touch it. So I'm showing you all this time that I spend sitting here or standing here, not touching it. And I'm showing you the reasons why. And also I'm showing it only takes a couple of seconds to figure that out because we have magic candles. 30-minute charts are magic candles, truly. I mean, at least the way I perceive it. Very straight up and simple. So here, I have no interest in a breakout or an ABCD pattern because of the quality of the consolidation. It's just no good. It's just a choppy mess. I want to see buyers taking over the price before the breakout. That's where I get conviction that it's going to go. And then I still won't touch the breakout. Ideally, I'll let it go and I'll catch the rebound, the retest. That's when you have the most conviction. That's when I have the ability to put on the kind of sizes that I like to put on. Otherwise, I won't do it. It's not worth it. It's just not worth it. All right. Here's another one. Look at this. Again, in the pre-market, you can see very bullish consolidation. And you can see what happened during the day, even on the 1-minute chart. But what do you guys think here? Tell me. You have this consolidation in the pre-market after a pretty solid bullish move, probably a catalyst. What do y'all think? Up, down, what? Ugly. All right, there you go. You're getting it. There you go. There's only a few guys awake in here truly know what they're doing. Yeah, it's a consolidation. It's very tempting, right? Oh, man, wouldn't you get excited for a long? Right at the open, this thing pops up a little. You get excited. Down here, you see at the open, it goes down a bit, starts to look strong. You start getting long here. Boom, you're out. You're stopped. You're done. You've blown up, 1,000 contracts. Bad stuff, right? You don't want to do that. Same thing. This consolidation is ugly. It's no good. I don't see a flat top. I don't see descending highs. Ascending lows consistently. I don't see any of that. I even see in the pre-market a false breakout. Look at that wick. I should have got a better screenshot here, but there's a wick there on the 30-minute chart in the pre-market. On the upside, it's telling you false breakout. Dangerous, huh? Yeah, dangerous. Sure enough, it went down. Even though before the market, the most tempting thing to do is think of this as a long. No way. Again, you can scalp it. You can see the 1-minute chart here. It goes down, 5-minute ORB downwards. You get a reversal. You can do all this stuff. This is what you guys love doing. Okay, do it. I don't care. But I'm not touching it. I'm not interested. Again, the levels were too tight to trade, but ignoring the levels, the price action is just no good. Straight up and simple. You know, you don't need much else. Again, magic candles telling you what not to do, right? There you go. What he's saying, Ramon, the biggest indicator was looking to the left on the 30-minute chart. Yeah, there you go. Very simple, right? Look to the left and you get everything you need to know. It's pretty cool. Yep, strong move straight down. There you go. Anthony, you don't like the DT, the double top? I don't see a double top. This top, second top, is higher than the first. It's not a double top. And I mean, you need to understand a double top, it comes from a very bullish move and then makes a tight looking double top. And this is a move down, not, a pull out of what do you call it, the arch in the double top. It's not. Just at least on the screenshot that we have here. We don't have enough perspective on this screenshot to know that it's been in a massive uptrend for about a month and then it's putting in, okay, then that makes sense. Otherwise, no. I won't even touch this. Forget about it. How about this? Some more magic candles. This one should be straightforward. What do you guys think? Same idea, same question. You have the pre-market activity. Look, the candle closed here on the previous day. Consolidation in the post-market and the pre-market actually gapped down, but pushed right back up into the post-market, the previous day's activity. Now it's sitting there. It's about to open there. You know that it went down. But what are you thinking? What are you thinking when you're looking at this in the pre-market? You have 5 seconds to look at it. What's your decision? Anyone? No? Short pop? Okay. Could be a little pop. Again, scalping perspective. RJ, long if it breaks and retests. Okay. Dennis, head and shoulders. Okay. Yeah. Again, all of that's fine. I don't think any of them are wrong. You may have a head and shoulders, right? If you identified this was in a huge bullish trend previously, we don't have enough information on this chart. Yeah. Possibly you can also look at a breakout. It's been bullish before the market opened. It consolidated, breakout, but then again, the quality of the consolidation here in the pre-market, just before the open, I don't see an ascending wedge. So I'm not seeing the buyers taking over during consolidation. That's what I really want to see. They're giving away their hands just by stepping up their buying price during consolidation for a couple hours before the open. I see that. Oh man, I'm all over it. But this is not there. It's not there. So I'm not going to trust the long. Again, if you want to scalp it to the short side, you can scalp it any direction you like. That's up to you. But yeah, you see, again, just having a very simple but strict rule set on a 30-minute chart. For me, these are magic candles. This is what keeps me out of the market a lot. 95% of the time. As you guys have seen in July, this month so far, well, the month's over now, I've only taken one trade. I've been sitting out of the market every single day. And you can see the price action. All of this I'm showing is all in the last couple of weeks. Even if the levels didn't exist, just looking purely at the price action, I wouldn't have traded anything. None of this makes sense so far. Everything that I've showed you. None of this makes any sense to put any risk on. Sure enough, there's been moves. Like on this particular day, it was a big move to the downside. I would not have been in it. So what? It doesn't mean I got FOMO or I should succumb to FOMO and then come back the next day and catch it and all that. That's all bullshit. If it's not there, it's not there. All right. And again, 95% of the work your trade book should do for you is keeping you out of the market. That's when you have a good trade book. When you're getting bored with trading, that's when you're doing it right. Seriously, this has been the most boring month of my life, July, but it's perfect. It's exactly what needs to happen. How about this one? Again, the level's too tight, didn't touch it, but ignoring the levels, what you have here is on the previous day, generally bullish, consolidated post-market, pre-market pushed up, bouncing off of the post-market zone, pushing up, making a new high in the pre-market before the market opens. What are y'all thinking? I mean, all this looks bullish before the open. But what do you think? Give me some ideas. Before the open, you can see what happened after the open, but if you just had this pre-market and the previous day to look at, what's your decision in 5 seconds? Nobody?
Yeah, long, I guess.
Long. Yeah, definitely long, right? Makes perfect sense. Makes perfect sense. You're getting higher highs, higher lows. That's the definition of a trend, right? Yeah. But there you go. Lana here got it right. Not a good consolidation. I'm not going to get into a trend. I don't like trends. I'm not going to sit here and identify that it's got higher lows consistently and then higher highs consistently. So that's an uptrend. I don't enter in trends. I don't like trends. They're just a pain in the ass. Can never.
So on that chart. Oh, I'm sorry. Go ahead, Avi.
Go ahead. What's up?
So on that chart, let's say right around in the pre-market right there, instead of it making like higher highs, if it just would have went straight across and consolidated, that would give you more information as far as, or just give you an idea of getting in at that time at the open.
See, if it just went sideways in a consolidation, I'm still not interested in a continued in a breakout. I need a certain type of a consolidation, that ascending wedge, because in an ascending wedge, what you have is higher lows, which is telling me that the buyers are taking over during the consolidation, which generally means it's going to lead to a good, strong breakout. Well, if it breaks out, it means that the breakout is likely to be sustained. It's not going to be a false breakout. It's likely to go to the target. So it's not just a consolidation. It's a type of consolidation. So in this case, you don't even have a consolidation. You just have this thing is moving up in waves. It's generally an uptrend. Fantastic. And sure enough, at the open, this whole trend failed. Look at this thing. Look at these 30-minute candles. You know why I don't play trends? I don't care, because in trend, I don't know when it's going to end. You see 3 times higher lows and higher highs, and you enter on the 4th one, and it goes down. What the hell? No point. Right. Serkan, yeah, go ahead.
Hi, Avi. Before the open, I see the ascending wedge. Is that wrong?
How do you see an ascending wedge here? Can you describe it to me?
Yeah, it's higher lows there.
What else do you need for an ascending wedge?
It's topping with the other candle on the left. So it seems like descending triangle, not the wedge. Sorry.
What you need is, yeah, Gurinder here got it right in the chat. You need a flat top.
Mm.
So you need a triangle. You need the candlesticks to keep hitting the same level at the top, hit that level from the bottom consistently. Every candle hits, then rejects, hits, then rejects, hits, then rejects.
Okay.
Every single candle in a row. But the bottoms are getting higher. So now you're getting a wedge, you see? That's an ascending wedge. And you get many of those. Many. On a 5-minute chart, you see them all day. On a 30-minute, very common. Right? This is just a trend. Higher lows, higher highs. It's a trend. And the trend failed right at the open. Oops, going back. The trend failed right at the open. I don't trade trends. I don't care about trends. I don't want to be in a trend. I don't want to enter in a trend. I want to enter at the beginning of the trend, which is ideally, which typically starts in a breakout. And the breakout is confirmed with the retest. That's when you enter the retest. That's the beginning of the trend. And I want to hold it to the end of the trend. I don't want to get in halfway, which is basically between levels and all that stuff. Forget about it. That's what this is. So on this day, even without these levels being so tight, I still wouldn't touch it, even if I had levels that were far out. There's nothing here. This is garbage price action. Absolute garbage. You're not able to capture those big moves for 10R and bigger with this kind of action. Very difficult. You can scalp the heck out of it. Identify your opening range, and 30 minutes after the opening, get a breakdown. Fine, do all that if you like. Whatever. But there is bigger money to be made.
If you don't see an ascending or descending wedge, and it's just kind of straight across, that's just chop. You just ignore it.
Yeah.
Or I guess what I'm saying is there other consolidations, other than ascending and descending wedges?
Yeah, there is actually one I've been working on just recently. I'll get into that in the next few slides. I've been working on it, and I've found it to be quite consistent. So it's something I'll probably bring out when I see it happen in real time. Anyways, I have some slides here with that in it, so we'll get into that here in a moment. All right. Yeah, Dan, I know these screenshots aren't great. I should have taken them better. I don't know how to expand these charts. Oh, there you go. Is that better? Oh, hold on. There we go. I just expand the screen. There we go. Better? All righty. That is better. Thanks for the suggestion. Hold on. I'll make it even bigger. Okay. Cool. All right. Another one here. Again, same question. What do y'all think? You have the previous day's action, at least most of it. Bit of a choppy day, but generally bullish. We are weak in the post-market, gapped up in the pre-market, bouncing off of previous day's support zone, and in the pre-market, reclaiming the previous day's high as well as a pre-market high, then dropping right into around about previous day's high at the open. Oh, sorry, before the open. What do you all think of all this? Do you see a setup? Is this a 30-minute chart setup? You have 5 seconds to decide. What do you think? Rajesh,
I say
no.
no.
Okay. Anthony, no. Dean, no. Lana says wait. What does wait mean? It's either yes or no. What does wait? Wait to decide? Or the decision is wait, as in don't touch it. Yes, there you go. No, there you go. Be careful when you say wait. You don't want to tell yourself the wrong thing. Yeah, there's definitely nothing in this. Again, good. You guys are getting the hang of this. There's no way I will touch this. Again, even ignoring the levels, if the levels weren't there and I could put levels anywhere I want, there's nothing in this. It's just, firstly, it was a mess. Then in the pre-market, I mean, these are just tiny little candles. This whole thing is really, in my eyes, just chop. The whole pre-market thing. And then it did a little breakout from chop. And then it went right back into it, all in the pre-market. Then after the market opened, it happened to break out. But realistically, I'm looking at the quality of this consolidation, and there's nothing in it. The consolidation here, it's hardly a consolidation because it's small candles, but it went up and it went down. It's more like a trend than a consolidation in a funny way, right? Up and down and all. It's just there's nothing there. So sure enough, it went bullish on the day. You can see this activity went very bullish. Fine, would have been a big day. But I don't have a trade. I don't have a setup. I'm not going to touch it. And just because it's beginning to go in the middle of the day, I'll get involved somewhere. No way. No way. That's how you give back the money you made in the last couple of months. That's the guaranteed way to get it. Give it back. It's basically getting into something that's moving, even though it's not your setup. And by the time you decide to get into it, you're chasing, which means it's near its end anyway. And now you've put on way too much risk with no reward side, and you're probably going to screw it up just because you're a human being. So again, nothing here. The power of candles. I'm telling you, 80%, or forget the numbers, but really the majority of what I need to know about when to trade and when not to trade comes from candlesticks. I'm telling you, even if I didn't have these Avi levels on, candlesticks are king. 30-minute candlesticks is price action, and price action is king. The way I read price action is on 30-minute candlesticks. And I'm telling you, it tells me when to not touch it, and it tells me when there's a potential 10R trade in this. And that's really, in the end, that's all I need to know. I don't care about anything else. I don't want to know anything else. It's not worth my brain power to know anything else. I just need to know when not to touch it, which is 99% of the time. And then I need to know when there is a 10R potential in it, which is very rare, and take the damn thing and leave it. That's it. Just leave it alone. Let it go for 10R. There you go. What do you got here? Are you only looking at previous day and pre-market? No, Helen, I look at it all day. I can look at it all day. I'll take a trade at noon or at 1. I'm not seeing a... yeah, I do it all day. If I see a setup later in the day, I'll take it. Like over here, even on this chart. Okay, I don't trade on this day because of the levels. But what you can maybe see is you see the tops on these first two 30-minute candles, and you're getting these higher lows. Interesting, right? Now maybe you're getting an ascending wedge after the open. So your entry could be here later on, closer to this time of the day, around 11. Could be, right? But this is not an ascending wedge the way I like to see it. See this candle over here, this little one, the last one? It didn't hit the top there. It didn't make the same top as the previous two candles, right? And I need it to make that top at a particular level that I believe in. And again, this is not about levels. It's more about candlestick patterns. I'm not seeing it here. It's almost there, right? Almost there. Good enough to take that breakout. Almost. But not really. If it's almost is not good enough. It's just not good enough. It's not worth putting $50,000 or $100,000 of risk on something that's almost there. It better be a perfect setup. And then if a perfect setup fails, which happens half the time anyway, that's fine. I can live with that. What I cannot live with is taking an imperfect setup and then making a loss or even a winner out of that. Both of them are very dirty, ugly feelings. I don't want to live with those. I don't like those. Right? So patterns can set up later in the day. And again, for me, 30-minute candles are magic candles because it's so simple to get the majority of the information you need to get to know who's taking over, buyers or sellers, and how powerful are they. That's all in these wicks, these higher lows, higher highs, flat tops, all this stuff. Very simple. All right, look at this one. This one's more interesting. Again, ignoring the levels. Let's just look at the price action. I'm not going to say anything on this one. I want to hear what you guys have to say. You can type it or say it. I want to hear what you have to say. Just look at this 30-minute chart and tell me whatever your opinions are. Yeah, chop. MJ, no good. Alex, horrible.
Yeah, nothing there.
Nothing. Yeah, messy. Yeah, there you go. Alana, Saban, Maybach, we all got it. Yeah, great big disaster, isn't it? And firstly, in the pre-market, I mean, before the open, do you have a plan? Is there something that makes sense? I don't see anything. Then after the open, you're watching the action. All this stuff is happening. I mean, what the hell? Nothing. Seriously, just leave it. Just leave it alone. Yeah, Mark, you're seeing the breakout already happened down here in the overnight activity. So whatever, doesn't matter. Again, leave it alone, right? Just leave it alone. Again, even when the levels are decently wide, and this is wide enough. I think, these are about $3 levels. I would trade these levels, no problem. I've taken trades on levels like this. There's enough room in them. But the activity is so garbage. Why would you? Again, magic candles, right? Tells you when not to touch it. Everything I'm showing you so far, have you noticed, there's nothing more than 30-minute candlesticks. I mean, you can do this on a black and white screen. You don't need fancy HD displays and all that. You just don't. It's dead simple. You don't even need level 2 or anything else. I mean, I make all my decisions basically on this. And it's a good way to live, really. Oh, here's one I actually did take. Yeah, this is the only one I took this month. A lot of you guys have seen this. Sorry. What do y'all think? Again, let's go through the exercise again. Anyone, any opinions at any point during the price action? What do you think? Is there a trade? Should you take it? Should you not? Here's the 30-minute chart. Whoops, excuse me. Here's the 30-minute chart. Here's the 1-minute chart. But we're just focused on the 30-minute right there. What do y'all think?
It looks choppy.
Okay. Choppy, not for you guys. All right, what's DT? Doubled up. No good. Jags, Alex, Sarkhan. 1045 Sarkhan. Okay. Yeah, I see that. Yeah. It is choppy. So now look at this. Pre-market, an absolute no-go, right? Nothing. So forget about it. And you also know within the pre-market activity, you don't want to touch it because that's where it's choppy. Now, the first 30-minute candle broke right through it. Cool, right? But nothing to work with. I don't know. The second 30-minute candle went up first. So it was quite bullish to begin with. And then it closed weak down here. Now, what you're seeing here is basically very bearish activity breaking out. Okay. Then even retesting the breakout from not a good consolidation, but it did do a breakout. It did do a retest. It closed down here. And on another perspective, you also see, if you look at the beginning of the trend up here, coming down to this point, the first candle, that's one move. Then a relaxation before the second move begins. That's a 3-bar play, a little reverse ABCD. Now, by the end of this second candle, when the second candle closes, that's when I anticipated a 3-bar play, a reverse ABCD. As it goes, it relaxes, and it goes again, right? Just an ABCD pattern, nothing to it. Turns out it happened at a level I believe in, and there's enough room to the next level that I'm thinking, all right, if it wants to break out and retest from this level, I will call this the reverse ABC, sorry, the reverse 3-bar play, ready to go. On a 1-minute chart, you can see the breakout happened where I think it was, yeah, here, this zone. Breakout happened, false breakout, then it really happened. And then it retested right in this zone. I think, well, the retest was right in this zone. Just immediately after breakout, 2 minutes after, right there. That's where I'm entering short. It went halfway to the target, came back, retested again. As soon as it's getting bearish again, I'm adding more. And I'm going in, and there's the target. So that's the entry. That's the add and getting to the target, and everything else just a bonus. As it goes through the target, I'm adding more for the little bit that I can get a little pop out of it. That's it. But what I'm seeing, what I'm really trying to show you is the magic of candlesticks, 30-minute candlesticks. It's nothing more than a reverse 3-bar play, which I did not identify until the absolute close of the second 30-minute candle. So it's 10:30 a.m. by the time I figure out this thing is a potential reverse ABCD or potential reverse 3-bar play. Now what I'm waiting for is weakness through the level. Basically, a breakout on a 30-minute chart, which on a 1-minute chart is nothing more than breakout, retest. It even gave you a second retest, and off you go. Nothing more than that. And if you look at it, the entry was right here, 10:39. The decision was made at 10:30. So after 10:30, I still had to wait 9 minutes until it gave me an opportunity to even enter the trade. And the opportunity to enter is on this 1-minute chart. Once I've decided, I've made my big picture decision on the 30-minute with those magic candles, it's telling me reverse 3-bar play. Then I'm zoomed in on the 1 minute. I'm waiting to see if it breaks out or what it does. So here's a false breakout. I'll leave it alone. Here's a real breakout. And on the retest is where I start getting into the position. There and into it. Does that make sense? So you see there's one opportunity here. And even this, I'd have to, looking back on it, it's a little bit tight. I would like a larger scale move. This is still small. It's only, what, $3? It's like this tight. It's not even $3. What is this? I don't know, whatever. It's tight. Getting really good RVR is difficult on this. It's not the 10R stuff that I like. It's barely 3R, I think. Barely. So it's not ideal, but I'm not talking here about levels. What I'm talking here about is candlesticks. Just looking at price patterns. On a 30-minute candlestick, you get the majority of the information that you need to make your decisions. And here it's just a reverse 3-bar play. That's all it is. I'm not looking at this as a retest of this breakout that happened from the pre-market lows. That's not it, because that's not a good consolidation. So I'm not going to consider it a breakout. I'm not going to consider it a retest. But I will look at this 3-bar play, reverse ABCD sort of thing. Basically, it's a continuation pattern. Anyone got questions on this one? On the price action and how this stuff works? This one's a little different, right? This one's actually one that actually had good price action, even though the majority of you were just saying it's choppy and messy and all that fun stuff. Not really. It's not really that choppy.
Yeah, we.
Go ahead, Rajesh.
Go ahead, Brett. I lost you.
Yeah, so this 3-bar play, I get that weed, but how do you ever think in terms of either 3-bar play or the quality consolidation and banging on that particular level before it continues?
Yeah, so you gotta understand what a 3-bar play and that quality ascending wedge or descending wedge consolidations are two different things. A 3-bar play is actually a momentum trade. Really understand that. There is momentum going in one direction. and it just needs to stop to get a drink of water, and then it continues running. That's it. It's a quick little pit stop, a very quick one. It's a momentum trade. You treat it very differently from those big consolidations on it. It consolidates for hours with an ascending wedge or something. That's different. That's a breakout trade. Two different things, right?
Understood.
Yeah. So I do have two different trade books. Actually, in this sense, three different. One is the breakouts. The other is the continuation, which is this one on the screen. And the other one is reversals. Three major categories, right? So in this case, there was no, it went up, but I'm not looking at it as a reversal. It's no setup for reversal. I'm not looking at it as a breakout. There's no good consolidation leading to a breakout, but there is a move and an opportunity for the continuation of that move. That's how I'm looking at this one. And all that takes about 5 seconds to decide. Once the second 30-minute candle closes, you can decide that in 5 seconds. And then all you're waiting for is a little breakout on the 1-minute chart and wait for the retest on the 1-minute chart, wait for that entry, and off you go. And just for your knowledge, guys, I put this level down here because I'm in the short, and my target is the next level, but often it goes through levels. So I'm thinking now, how far could it go? I just look to the left, and you can see this was the most recent area of support in the post-market as well as intraday. So I identified that as a level. Sure enough, it slammed into that and bounced right off. There's the 1-minute chart, slammed right into it, bounced right off. And that's me scalping that little last bit as it went from my Avi and Avi level into that green line. That's the little scalp. That's all just bonus. It's risk-free stuff. For me, the trade's over right about there. Hold on.
So trading back into the prior day's range doesn't concern you that it may hit resistance, support and bounce back?
Current real-time price action is king.
Okay.
So if real-time price action is that good, it's likely to just go through whatever happened in the past.
Got it.
That's why I like that quality of consolidation. Let's say you have that ascending wedge, and then it breaks out. And because it was such a good quality consolidation, I take the assumption that it's going to overcome whatever was previous overhead resistance.
Got it. Okay.
Yeah. Cool. What are you looking at here? Jay, you're saying there's a zoom button on the bottom right of the screen to expand it. There's a zoom button. Where's zoom? Bottom right? I don't know, man. Come on. You need some eyeglasses? Man, I don't know. I'm using Google Docs, or was it Google Slides? All right. Yeah, look to the left. There's chop. Yeah, Jags, we just went through that, right? There's chop, but that's why I like the quality of consolidation. I can get to a point where I can assume it's going to go through the chop if the quality of the consolidation is that good. If I'm firm that those buyers are taking over, or in this case, the sellers are taking over and holding it, as in they keep selling lower and lower. That's what I'm looking at. All right, cool. A few more here. Oh, this was a fun one. Look at this. Fun. Okay, here, this one, I'm sure you guys are going to get nuts with this. Tell me your opinions on this day. 14th of July. This is just a week ago, 2 weeks ago. Fun. 30-minute chart. What are y'all thinking? Right down here. We have before the open, you have the activity. You have the activity after the open. Give me your opinions. What are your decisions?
Probably no trade. It kind of blew its load before the market opened.
Okay. No trade. For the moment. No good. Alberto as well. All right.
Personally, I like it. Given the kind of the pre-market action and how strong it broke above, had a nice little retest. I would potentially look for an entry there to the next Fibonacci level, even though there's chop on the left side there. But like you mentioned, the current live price action is king. So I think I would kind of gauge off of that.
Okay. I like that. What are you saying? Alex Wagner, it looks better. Dean, long after the third candle, after the third 30-minute candle. Okay. Dan, nice tip. Okay, yeah, you guys got it. All right. Yeah, very interesting. So let's look at this. Pre-market, you show up to trade before the open. You see this stuff. You see a flat top. You see these ascending lows. This big wick down here, that's the 8 a.m. candle, right? I can ignore that one. That's interesting. I actually base my levels off the 8 a.m. candle, but this is settlements. I'm ignoring the wick here, and I'm thinking it's just a flat bottom on that white candle, that 8 a.m. candle. So I'm seeing these ascending lows, higher lows. But then this last candle before the breakout, that low just happened a little deeper than the previous one, right? It's not ascending anymore. And the breakout happened, all in the pre-market. And I'm thinking, well, that ascending wedge was shaping up, but then it got destroyed in the last 30 minutes. So based on that, no trade. It's all happening at a level I believe in. but I can't trade it based on the price action, right? This based on this tiny little wick down here on this last little candle before the open, right? And then the next time I'm ever going to look at it is at another level, which it got there. But now, so I didn't trade it, even though there's plenty of room in this to make a profit. Now, that's how I've traded so far. What I'm going to show to you guys now is that there's something new here that I've been working on. I've mentioned to some of you guys. This ascending wedge that you have here, right, with a flat top. And before the breakout, it does a deeper pullback. This little wick, like I said, it's not a part of this ascending wedge because it went in deeper, right? It went lower, made a lower low. But what I've discovered, looking at screenshots and various things, is you have an ascending wedge, and then when you have one last deeper pullback, then you get an explosive breakout right away. That's exactly what happened here. And it all happened in the pre-market. So this is the new addition to the way I'm seeing things. This is something new that I'm working on, that I believe if I see it now in real-time price action, I'll probably take that trade. Where you have a perfect ascending wedge, and ideally, actually, the wedge breaks right before the breakout. Then you really know the breakout is imminent. When the 30-minute candle breaks in deeper, breaks the ascending wedge just for one last pullback, shake out the weak hands, find those last few big buyers who are really patiently waiting to buy down there, and they're patient, so they're not going to sell soon. They're going to hold this thing, and sure enough, look at this thing. Right, this is a perfect example of an ascending wedge with that tail on it. In the other perspective, we say the cup and handle. This is a wedge and handle thing, if you guys are familiar with the cup and handle. It's a wedge and handle. This is a setup that I've just discovered recently. I'm just calling it that. I've never heard it anywhere else, so whatever. Never seen it anywhere else, but cup and handle is the closest I've seen it, and people use that on a weekly chart. I'm looking at a 30-minute chart, and I'm seeing a wedge and handle. So wedge and one pullback, and boom, there you go. So now considering this new trade book, this breakout happened in the pre-market. So as the market opens, I'm ready for it to bounce off and go. Just a retest of the breakout. Sure enough, it opened here. You may be able to catch that bounce. I don't really see a way to catch it here, or here. These 3 points are very tricky to catch, but this is where I particularly think I would get involved. Over here, it'd be very hard to get an entry here with a stop down here, and then, it's not enough room. This one also just happened fast. This one's hard to trust. Maybe there's an entry there. It's hard to tell. In real time is when you really know. But all of these look tricky. Here's where it looks like the most decent entry, and here's the thing. To manage this sort of trade, what you have is the setup was so perfect that you trust it to go through all that previous overhead chop and resistance and whatever's there and just get to the target. So entry right about there, stop right below it, and don't touch it. It gets there. That's it. You just got to sit on it. So enter about, let's call it 1040. You hit your target at 1. How many of you guys can hold a trade that long without throwing up?
Not yet.
Well, this is where you make 6-figure trades.
Yep.
I'm serious. This is the way to do it. This is the way I do it. This particular chart is a near perfect setup of the new setup that I'm adding to my trade book now. Basically a wedge and handle, even if it's a cup and handle, fine. You need the flat top, ascending wedge, but that little last pullback that breaks the ascending wedge, it makes a new low, which is perfect. Shakes out the weak hands, brings in the diamond hands, and you go with them. And you look to the left and don't look to the left. Just ignore it because you're going for that target. And you know your target, for me, it's Fibonacci levels. This is a perfect setup, right? Perfect setup. And it gave you a few opportunities to enter, a few. I don't know if I would enter here. I doubt it, but I'm pretty confident my entry would be in this area because of this action, the way it is, consolidation, all that stuff, the higher lows and all this, all there. Cool. What do you guys got here? Sikan, would you consider taking 30-minute candle or wait for the close of the one to risk the reward? Yeah, so Sikan, I want to identify the wedge. Once I identified the wedge, which in this case happened at the end of this this red candle right here, right? That's the ascending wedge. Beyond that, I'll see this 30-minute candle goes in deeper, and it hasn't closed, but it breaks out. And that's fine. I'll enter there. I try not to enter the breakout on the 1-minute chart. I'll wait for the retest and enter. Of course, this happened in the pre-market, but if all this happened during the market hours, yeah, I won't wait for this to close. Once I identify the setup, which is basically the wedge and handle in this case, I'm happy to take it. Don't have to wait for that close. The wedge is there. The handle is just a new addition to this strategy, which gives me more conviction that I can put on some size and let this thing run for $1 million. No big deal. What do you got here? You wouldn't take it with the good entry. What accounts would you got here? How do you decide to enter at a 1 minute multiple retest? Yeah, how do you decide? Yeah, so I use naked trading setups. You can see on this first time that it came down and bounced off, it came down aggressively, big red candle, right? Then it put in the hammer and the consolidation. There's no way to enter after a big red candle. And sure enough, it just shoots up again. Maybe it could enter. There's a tiny little ABCD pattern there. Maybe it's very tiny. I should have got better screenshots. Sorry, guys. I'll make a mind. I'll make a note to take better screenshots from now on. I don't do it enough. So maybe there's an entry right here towards the end of it. Maybe here I don't see it. I don't see anything. It just came down and it bounced. Over here it came down so aggressively, bounced aggressively. There's no way I would put risk on this thing that's jumping around. Over here it came down and consolidated. Then it put in a bullish small candle. Then it printed a new high. That would be the entry. And then enter and go. So that's how I do it on a 1 minute chart. So I'm looking for these naked candlestick setups. If you guys are not familiar with that, that's not the point of this webinar, but I've done multiple webinars on this, which is all available in our video library. Take a look at those. Those are you get all the details of the candlestick criteria that I'm looking for. Oddly enough, I'm looking for the same thing that I do on a 30-minute. 30-minute, 1 minute, to me, is the same thing. I look for the same setups. That's called a fractal pattern. Even the fractal pattern webinars there. So take a look at those. You'll get all the details. Helen, the video library is in our announcements channel in our Discord. I've put a link that's pinned to that channel, right? It's in that link. And you know what? I'll bring the link out here as well. Just a moment. Let me put it here in this chat for those of you who are a little bit lost. Where the hell is it? Why I'm lost, man? What the hell? I hate being lost. There it is. Okay. Here we go. All right, here's the link. And in there, you'll see the free material section. It'll take you right to the video library. Everything's organized in different folders. You'll see the webinar recordings, short video recordings, mentee webinar recordings, the course material, all the live trading sessions, all the candlestick sessions, candlelight sessions, all the trade reviews. Whenever I've taken trades, I do a review of them. Those are usually 5-10 minute videos, all that stuff. It's all there. There you go. Sunny got the link too. There you go. Short strategies. Cool. Cool. Sure, Lana. Come back next time. I'll watch the replay. Alrighty, cool. So you guys got this, right? Makes sense. Now look at this one up here on the SPY on the 30-minute chart. This level 624.62. Look at that. It gets to the level, consolidates below the level, then it breaks out. A little bit of a consolidation during the breakout, right after the breakout, and then it starts to go again. What do y'all think? Good, no good up in this zone for another leg up? Anyone? All right, yes, you take that. There is about other account riskier. Okay. All right. You guys like it? All right. Dan, you say go. I don't touch this. No way. Are you kidding me? There's no way I'll touch this. Look, let me show it to you. We described the quality of the consolidation down here for that first move. Now look at the quality of the consolidation here. There's a big difference. Firstly, it doesn't do a flat top at the level I'm interested in. Secondly, it's not an ascending wedge at any point. So don't touch it. There's no way I'm going to touch it up here. No way. Forget about it. And it's not a 3-bar play. A 3-bar play, like you saw earlier, is one massive candle, then a relaxing candle, and then it goes. There's no massive candle here. It goes from one level to the next so fast. None of that's happening. This is not a 3-bar play right in this zone right here. It's nothing. It's a whole lot of temptation. This is where your day traders blow up your accounts. I don't touch this stuff. And sure enough, look at that. Where would you enter on a 1 minute chart? Somewhere here. You're getting chopped up, messed up. What is all this? What is all this? Can you sit here for 2 hours like this with all this garbage? Having a position on, especially with options, it'll decay against you. There's no way. There is no way. Right? This is a perfect setup, perfect entry. Just leave it alone. Ignore everything to the left because the setup is that good. Real-time price action is king. Serkan, I want my flat top to be precisely a level that I'm interested in. And for me, it's only these Avi levels. Like this one, the flat top happened to be at a level that I'm interested in. So that's it. I won't go and create a level. I just won't do it. No way. Right? You see how strict I am about the trade book? It has to be that way if you want to put real risk on. You have to have it that way. right? And again, this comes down to everything in my trade book is very strict, but everything comes from 30-minute candlesticks, magic candles, right? I'm telling you guys, magic 80-20. There's one indicator, just one. That's a 30-minute candlestick chart. I get the majority of what I need. Even if I didn't have these levels, I could still use it. Still use 30-minute candlesticks to make these decisions. Not a big deal, right? Oh, here's a fun one. You guys know the drill. Tell me what you think. What is this? The 11th of July, a couple of weeks ago. Ooh, fun. Look at the levels. They're so wide. I could, oh man, there's $1 million between these levels. You know that? It's $3 between them. Raymond, no. No, you guys don't want to look at this. There's so much room to make money in this. You're telling me you won't touch it? You get 20 to 1 RVR. Come on. Come on, you guys. Where's your courage? What the hell?
Down the tubes with my money.
Yeah. Well, good. You guys are all Raymond, room to lose money. That's right. Yeah, no, that's great. That's great. You guys are not getting tempted by the potential massive move, right? That's what I'm really happy to see here. You guys are not seeing, oh, look, the candles, the levels are so wide. There's lots of room to make money. You got to find an entry somewhere here and go long or go short. And it's a good thing that you're not getting tempted. This is where traders blow it up. Again, temptation. There's no setup here. What is this? What is this garbage can over here? Look at this. Up and down, up and down. What the fuck, man? Wasting my time. There's nothing. Again, all on the 30-minute chart. There's nothing I will touch. You can scalp it. Sure, 1-minute chart, you get a 5-minute ORB going down. You're getting a bounce off here. You get that entry, scalping. Then you add more of this ABCD breakout. And you're getting high if they break in this zone. You scalp, man, go into what you want. But that's all garbage to me. I won't do any of that anymore. I used to trade like that. This is not how you make big money. You want to make big money, you wait for big setups. And then you hold on to them. When they run, hold on to them. Otherwise, cut them quick. As in, you know where your stop is. So yeah, good. Nothing here. Absolutely nothing. Again, magic candlesticks, right? Irrelevant of the levels. Levels are telling you room to make money, but the candlesticks are where the magic's at. It's telling you, don't touch me. Don't touch me. Therefore, you don't lose money. Right? Very important. Oh, here's another one. Okay, we're getting closer to the end. I know you guys are getting exhausted, but hey, day trading is exhausting. Learn to read candles. Come on. What do y'all think on this one? Look at that. Lots of room to make money. The levels of the burgundy lines are so far apart. Big breakout, big move. I mean, that's $1 million right there. Gurinder, yes. Okay, our higher lows, but shitty consolidation. Okay, there you go. What else? We got a yes, we got a no. No retest for RJ. Alex, breakout. No consolidation. No, just don't like the wick. Okay, there you go. There you go. Yeah, there's overhead resistance there. Seriously, it's the quality of the consolidation that kept me out of it. Again, very important example because there's massive room to make money. Again, from here up to here, that's about $1 million. Put on 4,000 contracts and tell me what that looks like. It's about $1 million, really. It's amazing how much money there is to be made. But there's nothing here on the 30-minute chart to tell me to get into this. Nothing telling me. And this breakout just happens out of nowhere, quite literally. It's in the middle of the range and it just pops up. What the hell? What are you going to get into? Right? And let's just say we had a perfect ascending wedge or something down here leading to a good 30-minute breakout. On a 1 minute, I also need the same thing. I need an ascending wedge below the level, then a perfect breakout, then a retest, then I'll enter and go. None of that happened here. None of that. So don't touch it. Even though there's $1 million left on the table, you got to look at this as not $1 million left on the table. You got to look at this as good. I didn't touch it because not 90, but a lot of the times when it goes out of nowhere, it pops up through a level, it just comes right back in. You saw what happened here? Boom. Same thing. It happens often. Look at this. Over here, it popped through the level and popped right back in. This happens very often. That's why I believe in the quality of the consolidation. For me, that is so important because that way I can truly trust the breakout and even trust it to a point where it overcomes previous resistance, overhead resistance. Like if there was a really quality breakout consolidation here, I would catch that breakout or retest on a 1 minute, and I would assume it to go through that overhead resistance right there. I'll just leave it alone. Let it get to that level, go down, it'll pop up again. You can make that assumption without too much fuss. That's the whole point of this. Good, you guys are getting the hang of this. All right, last little bit here. This one should be easy for you guys. You all now pros on this stuff. What do you think on this particular day? 30-minute setups, pre-market, and even during the day? Anything? Anyone? Anything? No. Yes. No. All right.
Yeah, I like it.
All right. You just got a magic 8 ball. Yes or no? Right. That's what you're doing right now. Dennis, you think no flat top? Grinder, yes. Raymond likes it. You're Rajesh. Like your win right now. You got to get your head out of Abu Dhabi, man. That's your problem. Yeah. Anthony, ignoring the wick, you like it. Yeah. Well, here's the case. Look at that. You have a decently flat top in the pre-market, ignoring the wick, right? Is it? I can't even see it. Yeah, you have a decently flat top, but now you have a flat top, but you have a bit of an ascending. You have ascending lows here without the flat top, so you can see what's happening here already. And just trying to explain it to you, is it a flat top? Is it ignoring the wick? All of that already for me took more than 5 seconds, and to me that's part of my rule book. No, don't touch it. You have to squint your eyes to bend a few rules because it's almost there. That's a no-go. Straight no. That's my rule. If it takes more than 5 seconds to figure out, it's too complicated. It's not 80-20. Just dump it. Go do something else with your life. Really. And that's not just my rule with day trading. I do that with most things I have to decide upon, which is strange, but actually I end up making better decisions. So you can see how this is close, right? Really close. Also, don't forget, it did break out in the pre-market. You can trade pre-market if you like. But then, I don't trade pre-market. So even that was simple enough. Don't touch it. Right? Even though there's a lot of room in this to make money. Look at it up and then down. Look at this thing. Massive amounts of money to be made. But no setup, no trade. And again, if you have to squint your eyes, if you have to be more alert than your natural state to figure it out, it's not for you. It's not 80-20 anymore. Now you're putting in too much effort, too much risk. You're going to find yourself in trouble. Right? Don't touch this shit. Bunch of garbage. All right. I'll last a little bit. I keep thinking it's the last one, but it's not. All right, let's move through these a little faster. Anyone opinion on this? Oh, this is the worst of the screenshots. Sorry, I got to take better screenshots. It's not even zoomed in. Anyone got an opinion on this one? No? Alex, no? Yes, no? Rajesh, no? You guys are bored with me right now, I'm sure, with all these candlesticks. I told you, candlesticks are king. Why do you think I'm shoving it down your throat all the time? Candlesticks, magic candlesticks. Yeah, there's nothing here. Look at this. Consolidation, right? Big old garbage can, and then it drops out of nowhere. What the hell? There's nothing to think about. There's really nothing. If you want to think about it, it was in a downtrend and made a reversal, but then you have to look for a breakout going up, continuing upward. But still, in either direction from the pre-market, there is no decent consolidation. There's no ascending wedge, descending wedge. There's nothing. Even later on in the day, it didn't do anything. Just bouncing around between levels. I mean, what are you going to do with this thing? Yeah, Kim, above 622. But again, it has to make an ascending wedge and really convince me that those buyers are taking over below 622. And then they'll have a big, good, aggressive breakout through 622. And look at this thing. No consolidation. Look at this. In the pre-market, no clean consolidation. And sure enough, after it opened, what is this? Up, down, up, down, up. Man, what the hell? You're going to make money on this? Yeah, you can. You can scalp it. But you're not going to make $1 million doing this, trading this stuff. You do make $1 million and keep it by not trading this, by trading those other ones I showed you. And then don't trade this. That way you actually keep the $1 million you make. You trade this, you're going to get in, you're going to stop out. You get in 2 more times, you stop out. Now you've lost half of that $1 million you just made. And now you're freaking out. That's how this works. That's how this game works. Truly. And I keep saying millions because I believe that's available to everyone here. Everyone, even if you're risking $10 a trade right now, whatever it is. It's available to all of us. It's right here. It's in magic candlesticks. It's in 30-minute charts. If you want a magic indicator, 30-minute candlesticks. No other complicated stuff. Really nothing else. Simple enough. All right. So I was just telling you, money not lost also counts in your P&L, right? That's what most of these screenshots I showed you is not trading. It's telling you when not to trade. Why? Because when you take those kinds of positions, you have a high probability of stopping out, much higher than 50%. And then that negative row shows up in your P&L. Well, imagine those negative rows were not there. So that would be money not lost. It counts in your P&L. Just think of those things. When you get temptation and you want to get into it, think about what the P&L is going to look like for you later on when you look at it after the day's over or after the month. You don't want those negative numbers in there, right? That's why the strict trade book. That's why The trade book has to be so strict, but also so easy to follow. And for me, the definition of easy to follow is a 30-minute candlestick, a simple 30-minute candlestick. It's magic. You get the majority of the information you need. At least I do. I get the majority of information that I need to go and put $100,000 of risk on a single trade based on a 30-minute candlestick. No other complicated PMI bullshit, FOMC, whatever. None of that matters. Really, none of that. Most of the time, that's just troublesome. So these couple of images here, the pain of the discipline to sit out a lot of those price actions that I showed you, this is what it looks like. But then if you do take a bad position, you end up in a bad position, this is what the pain looks like. Pain of regret, because it hurts, right? I like to put this stuff in my head. Being disciplined is painful. It's not easy. You don't get to just be expressive and whatever. You got to be disciplined. Well, that hurts. But if you're not disciplined, you end up here. You end up with a lot more pain, the pain of regret. And I know I've lost lots of money. You guys also have. You know what this is, right? Very important. Now, this image here on the right, sometimes holding on does more damage than letting go. By holding on over here, what I'm saying is all these indicators, and the whole point of today was trying to show you the power of these 30-minute candlesticks. You're holding on to all these indicators. A lot of you are, most of you are, that truly become painful to you because they put a lot of strain on you. They're taking a lot of you, they're draining a lot of your time and your energy and your attention span, your mental capital, which is just devastating, because then when the right indicator comes together, when the right setup comes together, you're already drained and you can't even put on the trade and you can't even manage the trade after that. You're not there anymore. You're dead. The day's over for you, right? You end up with this guy with his hand, the one at the top, holding on too tight. You really end up hurting yourself, and it's truly up to you to let go. Nobody's forcing you to hold it yet. You may have come across some marketing and somebody sold you an indicator or whatever. But it's up to you to let go, or it's up to you to absorb it. And now that you're here and you're realizing that things can be much simpler, you got to go and decide what are those things on your charts that are really driving you nuts and causing you a lot of pain, a lot of drainage on your energy. I mean, think of this. How do you guys think I'm able to talk through trading with you while the market's open, looking at multiple charts, and still at the same time put on $100,000 risk kind of trade? Anyone ever asked that question to yourself? Can you do what I'm doing? Well, one of my tricks is a 30-minute candlestick. So it's not draining me. I have so much energy left over. I don't know what to do with myself if I was just sitting here and trading by myself. Might as well talk to you, right? Because really, you've seen my charts. There's nothing on it. There's nothing on it. You can see how little energy I actually use for my own trading. It's so tiny, even though the trading itself, the numbers are large. But it's nothing. It's not draining. It's actually quite easy, because I'm keeping it that way. I'm making it that way. I'm keeping it that way. And this image here on the right with this guy holding onto the rope, I've been there. I spent many years in there in, well, you guys know the community, but learning various things that are complete bullshit, garbage, nonsense. And the guys teaching them, even, they don't have a good grip on it themselves. They just know how to present it well. That's the reality of the bullshit bogus you got going on in the day trading world. And you guys are in here now. I'm trying to help you overcome all of that bullshit. Make sure you get in there and identify what is the bullshit in your trading world, in your trading screen, in your trading setup, in your trading. And please eliminate it. And then you'll find that you'll be able to come here and talk on the mic to 100 people while looking at 10 different charts and still taking your own trade. No big deal. It's not difficult. It's not. I'm telling you, it's all available for all of us. You're just getting lost with too much bullshit. So holding on to those things that you've been sold does a lot more damage than letting it go. And it's really up to you to let go. Look, you should have seen my charts from 3 years ago. I did a webinar on this, my old screenshots. Oh man, I had 6 screens to begin with. And each of them had about 5 or 6 different time frames in them and different tickers. And each of them had a tape running through and a level 2. And oh my God. You know what was happening during that time? I was losing money. You know what's happening now? Something else, right? There you go. Very important. And here, again, the same idea. I'm going to read this one to you. Dopamine from information gathering is a dangerous drug. Your entire life will change the moment you stop looking for more information and start acting on the information you already have. This is really a problematic thing for day traders, because every time anyone gets into a bit of a losing streak or even a losing trade sometimes, Us human beings were so sensitive, so fickle, and so pathetic, really, that we go out there and look for another magic indicator and look for more information, just running for safety. I did hours of this in my course. Go take a look. But really, you're just looking for dopamine. You're just looking for a little feel-good hit after a bit of a red trade. And then you start incorporating that into your trading. Now you're wondering what happened to your trading. Why is it such a mess? Because you went chasing dopamine. Really did. And you guys know what dopamine is. It's the thing in the brain, chemical, all that. We're all adults, so you don't need me to tell you. This is a real problem in day trading because, again, you guys know the internet's full of shit, full of people selling you all kinds of indicators and strategies and all the rubbish of the world. And anytime you are in a losing situation, you become vulnerable to a point where you go and you look at this stuff and even buy it sometimes and then put it on your screen. And then you're in trouble. Now you know how dangerous of a drug dopamine is, especially in 2025, where we have access to the internet and freaking AI will tell you when to entry signal and exit signal, all that bullshit. Are you kidding me? Even that's going around these days. Don't waste your time. It's very simple. You have a 30-minute candlestick chart on your screen. Fucking look at it. Delete everything else, and then come and tell me how easy and beautiful your life is. I'm just telling you my story. Okay. Once I stopped doing this, chasing information just for a dopamine hit after a rough day of trading, I got better. Instead, when I'm having a hard time, what I do for a dopamine hit, anyone want to guess? Come on, you guys, I talk on the mic all day. You guys know. What do I do? Dopamine hit. Every time I tell you guys this, every time I look at the sunset. Yeah, Jim's one thing. There you go. Yeah, that's it. I get on the bike. Yeah, I'd get on my Harley and I ride it into the sunset. I don't care how far I have to go. Fuck it. That hot tub, Ryan. There's that. That's a vacation thing. No, but really, my bike is literally, it's right outside this window. My garage is right there. And it's right there. I'm literally like 10 seconds out of this door. I'm on my bike. I'm out of here. I don't even care where I'm going. Usually I'm just going into the sunset, wherever that is. Going west. That's it. And that's a good dopamine hit. That's not dangerous. But you guys fucking around with your trading with dumbass indicators and idiots on the internet who don't even know how to trade themselves. I mean, let them show you their live trading. Yeah, none of them have it. You know why? Because they don't have it. That's the truth about it. So really don't fuck with yourselves. Okay? Just don't. You guys are smarter than that. You guys are in here for a good reason. This is how I do things. I just cut out all the rubbish of the world and stay focused. You need to do this. Otherwise, you're just gonna end up being a loser, losing trader. And then you're going to send me another message, and I'm just going to tell you're a fucking loser. Please don't message me. You have it in this webinar, okay? All right. Oh, yeah, a little last one. I keep thinking of whatever. People do not decide their futures. They decide their habits, and their habits decide their futures. Isn't that the truth, huh? Think about that for a moment. I was telling you guys, I think, on the microphone a few days ago or last week at some point, I think during happy hour, maybe we were talking about this. There's 3 different tenses: past, present, and future. Living in the past is not useful at all. You know that. No big deal. You can't just go daydreaming about the bullshit that happened in the past. It hurts. It just ruins your present. Also, the future, no point thinking too much about it. You got to think a little bit. But really, I spend only 5% of my energy thinking about the future. Because truthfully, no matter what big plans you make, the world will always throw something at you that you didn't plan for. Then you have to think on your feet and deal with it, right? Simple enough. We're all adults. We all know this. So don't spend a lot of time thinking about your future. Seriously, I spend 95% of my time, I like to think so, in the present moment, right here and now, and making sure I'm doing what is the right thing for here and now, because in the end, that is what truly decides my future, my current moment actions, not the plan of action that I have for tomorrow. Tomorrow gets decided by how well I sleep now at night, right? A lot more than what I planned for tomorrow. So I spent 5 minutes maybe writing down tomorrow's plan. Okay, wake up, brush my teeth, get to the gym, show up and day trade. That's it. That's the plan. There, I didn't even take 5 minutes. It was nothing. Simple enough, right? So in day trading, it's the same thing. I was telling you guys earlier, real-time price action is king. Most important thing. Stop fantasizing about all kinds of stuff in the past or in the future. The price will go there. It has to go there. Guaranteed to go there. Man, real-time price action, real-time 30-minute candlesticks, magic indicator. Really, magic candles, I call it. You don't need to think too much. You just don't. All of you overdo it. Way overdo it. I can see it in the questions you ask. I can see in the messages you guys send me. I can see it in all the one-on-one sessions I do with all of you. It's just most of the time I have to tell you guys you're thinking too much. Most of it. right? So try and think about these sorts of things. I'm just trying to plant seeds in your heads over here as we continue to work together and grow as traders. This is the stuff I find truly important. And oh yeah, again about the future. Your next chapter is going to cause some people they wish they treated you better. Again, this is day trading because all of you have come into day trading. And seriously, anytime you've told your friends and family you're going to be day trading for a living, they probably treated you like shit. Most of you. Because what are you doing day trading? Everyone loses money in the markets. This is the majority of you, right? Well, you get the shit right, and they're gonna, yeah, well, that's your revenge. You don't have to go and hurt anybody. They're gonna wish they treated you better about it. They wish they would have supported you better. Because for all of us in here day trading, most of us come from that background. When we go and tell our wife or whoever, I'm gonna become a day trader. Fucking hell. You know how much support you got? You got none. You know that. I don't need to tell you that. I got none. Fuck. I was into Bitcoin when it was nothing. And people are telling me, what are you wasting your life on Bitcoin for? Well, where's it now? Huh? Fucking son of a bitch. I'll tell you. But you see, you do it right, the results are fantastic. I'm serious. Do it right. Just focus on it. Again, you can't make decisions based on what other people support you or don't support you. You got to make decisions on your own thinking, right? I'm just here sharing my experience with you on 30-minute candlesticks in this webinar. That's basically the whole thing. But there's a lot of philosophy behind it, which I'm sharing with you guys here in these last few slides. You got to just become rock hard. You got to develop a really thick skin to make it here in this business and cut out those indicators, focus in on the 30-minute candlestick. And really, there's a lot of shit around you, as in a lot of people around you, and mostly they're jealous because they got to work 10 hours a day and collect a salary that's not even close to one single trade that you can take. You know, most of it comes from that direction. So anyways, this is all true. We all going to face it. Okay, there's no point hiding it. I know it. I've gone through it. Nowadays, I go through it a lot less because I've been trading for a while and people are getting to know me a little bit. But all of you are going through this, so it's normal. Okay, it's perfectly normal stuff. All right, and that's the end of that. You guys are all here in the mentorship. If you're in Dubai, let me know. I'm always here meeting up with people. All good. We can do some Q&A now, and you all know where all the links are. Here are the links for the social media and the videos. Everything's in there. Y'all are in here anyway, so all good. Fun. All right, cool. Glad you liked it. I hope you liked it. Good. But now, who wants to talk about what? We can do some Q&A. How long did that take? Oh, man, it went longer than an hour. Anyways, Q&A. If anyone's got any questions, we can go through that now. And yeah. Yes, Dan, go ahead.
Yeah, Avi, that was a quality webinar there, 5 stars. What you do for this group of people is pretty remarkable.
Thank you, Dan. I appreciate that. I appreciate you being in here as well. And really, all of you in here, you're fantastic. Truly, I enjoy being here. And it's a really big feedback loop in the sense that I come in and it looks like I'm putting in a lot of energy and effort, but honestly, I like being here. That's where it starts with. That's where it starts from. And so that's because of you guys. You guys are fantastic, you know. It's the vibe, it's the energy. You can just feel it. I don't have to calculate it. It's just a feeling. So thanks again. Thanks, Dan, and thanks all of you. Freaking awesome. Yeah. Cool. Thanks, Irfan, Darius. Cool. Alberto. Cool. Good stuff, guys. Good stuff. All right. Yeah, Anthony got a video here about the present, future, and past. All right. Mindset stuff. Very good. Cool. All right. Thanks, guys. Good. No Q&A. That's great. I will then shut down this recording. Hold on a moment. We shut it down.